Good evening traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen, euro dollar and Bitcoin. So last week I suggested that the Aussie dollar, which we're going to start with now, would pull back to the 4-hour 50 EMA and then break down nicely. So was halfway correct there. It broke down very nicely, good bearish candle here. Quite a lot of high volume here. We are approaching the 775 area, so be wary of this when trading. And I do feel that Aussie will actually have some strength this week coming up, so I think this will pop up to the upside. So when we come down to the daily chart now, you can see it popped up, it moved up significantly, and then it's moved back down. This is just really just one big wave up and wave down. So it's going to be very difficult to predict where it would go next, if that makes sense. So looking on the lower time frames, I feel what we're going to have is this. So this here, by the way, is my original trade. It never worked, although the limit almost got touched as well. So that's the trade I predicted last week. But here's what I think now. This is your whole move down. The pullback to 79, this black line here would be quite ideal. You can see it's got multiple rejections there, quite nice. And just a pullback to here, the 382 level, that's where the interest will then kick back in again. And I then do think it will head down to the this 77 level. So if you had a trade around about here, for example, you can get out around about there, just above the 77. You can put your stop there somewhere. If you've got a nice rejection there, something like that, 1-2% profit there. That's what we're looking for this trade here. So I do feel it head back up. There isn't much price structure for it to head back up from that at the moment. So where it is now, it is in the middle of nowhere. But my idea in thinking that it will just grind up, I think that is really going to happen this week. So for me personally, don't take it long for the moment. Just sit in your hands, wait for it to show the reversal here. And with all the dollar pairs, it's going to show you the same here. So now we move on to euro dollar, we have a very, very similar story, but a little more better structure. So the weekly chart is this. We've got this nice free candle reversal here. So you've got a bullish engulfing candle up, reversal candle, bearish engulfing candle down. Volume has been massive here and is maintained here after the ECB meeting. So if you zoom out now, you'll notice how below 1.2 the volume here is quite high. Above 1.2 it's very, very low. So the interest to move from here to here is now really on the cards. And do not be surprised if we do touch 1.2 within the next 2 weeks now, okay? Because we rejected 1.25 very, very nicely. That said, the problem you have to overcome is this daily trend line here. Now, it's only a valid 2-touch trend line. We haven't actually rejected it here at all, but we have decelerated on the candles and the volume just slowed down a little bit there. So for me personally, I would not be surprised if you see a move upwards on Monday and Tuesday, rising to test the 1.23, 1.235 area, which I'll show you now, and then we have a nice big breakdown to the downside. The daily 50 I'm not too concerned with. As you can see, the daily 50 has not really been respected at all whatsoever, so forget the daily 50 for the moment, and I'll take that off now for you guys. And I just feel that that's the best way for it. When you come down to the intraday chart now, and what I see here is we've got this nice zone here at the top, which price broke down nicely. I was expecting a pullback to the 4-hour 50. We never got that at the moment. So for me, it's one of these things where we'll wait and see. And if you pop down to the 1-hour chart as well, you can see we've got a nice trending bearish market here. Now, when you come back to the 4-hour chart, I would suggest we'd have some form of action around the 1 point, see here, this area in this zone here, pretty much just the zone. It may be it tests the 4-hour 50, but again though, at the moment it can kind of test it and chop through it. So that's why I'm saying this zone here is more interesting than the actual 4-hour 50. If you do get this trade here, it would be an excellent opportunity because this would put in a lower high here, and then you can take it lower quite nicely. It'd be something like that I'd put in. And I'm targeting 1.20. That's what I'm expecting to go to. Another 4% trade there. If you want to be safe, you can move it up there for a 3% trade. That's absolutely fine and perfect there. And you'll get a good trade there as when it rejects this area whatsoever. You may find it rejects here, but you still need to stop above this zone here. You don't want to be in. If the market gets in the zone, it will then test the top of the zone again. That's your problem. So you need to have your stop above the zone there. Pound yen. Now, pound yen last week, I suggested we have a bearish week this week, and if I'm not mistaken, that's a nice, beautiful bearish candle. What I like you to notice as well here is how the bearish candle here had high volume as well, so it's a valid bearish candle. And I'm pretty certain now to say that we'll now touch the bottom of this zone here at 147.5 to 148. The weekly 50s there has been tested before. It might not be tested, it might not be respected, but at least it's going to be a target for the longer term short positions to go for. When you come down to the daily chart now, what's happened is that this zone between 152 and 148, this zone here, you've got a nice break into it. You've got some good volume breaking into it as well. So it does mean that it wants to go in this zone, and it stayed in this zone, which is very, very nice. So a small pullback to 152 would be an ideal trade here. So when we come down to the pound yen, on the 4-hour chart, I've marked in 152 already. It's not the cleanest on the 4-hour chart, but you can obviously visualize as we start grinding up here, the 4-hour 50 will start coming down. And we've got a little zone of interest here, so for me personally, it's a very, very nice place to place an order. And you can target something like that. Is a very, very safe stop, that is. If you want to wait for a live trade, live entry, you can maybe target something like that and get a tighter stop and get more risk to reward there. But if you're going to do that, you need to do something like this. You need to move your stop a little bit higher and actually wait for the trade to happen. So sit in your hands and just wait to see that if you don't want to place the order. But for me, that's what I really do think next. And like I said, I can't see a reason why this won't now go down to 148. A lot of the pound pairs are looking a little bit bearish, and some of the yen pairs are also looking bullish. So XXX yen is looking quite bullish there. Now the last trade of the week is Bitcoin, and this is an interesting one now because this is my area of interest here. And notice how we've got the highest weekly volume, well, one of the highest weekly volumes recorded, especially in the last 12 months or so, rejecting the weekly 50 EMA, which is quite significant in my eyes. It doesn't mean it's going to break back up to the upside, it really doesn't, but what it does mean is that there's a lot of buy orders around this area, so we want to confirm that buying interest here. And the daily doesn't give me too much at the moment. It does look nice, don't get me wrong, but it's not the greatest in the world. We can draw trend lines down here, and we still haven't broken this trend line here. You can draw a trend line here and also turn around and say I've not broken the trend line there. So for me, the daily doesn't give you any boost sentiment. There is no higher highs, higher lows, but for a short-term trade, I do feel up to about $10,000 would be a good trade there. So let me just go there and show you that one now. So here we are again on the 4-hour chart, and what I had outlined before to people is the 4-hour 50 has been respected quite a lot here. So we're just going to zoom out. This is a bit of a messy chart. We'll zoom out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 here, and now we're breaking up and coming back down again. But just be careful, it has done this a couple of times. We respected it, broke up, then come back down again. So just be careful if you do take the trade, whether you are actually getting a proper retest. So what I would like to see is this, to explain to you guys now, is I want to come down, test this area here of 8,300, and I want to see rejections with high volume. It must be high volume. Don't get high volume, this is not a good test. If you do get high volume, a low test like this candle here with high volume around at this area here, see how these volume bars here, you get the high volume there on the low test, it will go higher. If you get a low test with low volume, I wouldn't want to enter on that candle. I'll wait on a candle afterwards. Personally myself, if we just zoom back out against the area of interest, I'm going to plot my chart now. You're looking around about $10,000. That'd be one level. 1, 2, 3 touches there, and it may go as high, even as high as say $12,000. It could really rally hard here. But the one thing you're going to have now is this market move going downwards was violent, and it's very emotional for most traders. It was. If you bought in November, you're now at break even. Depending what part of November you bought in, actually, but you almost virtually break even if you bought in November. How are you going to feel in 2 months where you've bought? This is what I want to explain to you guys here. If you bought here in November the 14th and December the 14th, you are at 16,000 and you put money at 8,000, you think you're God. You doubled your money in a month you have. You're going to think you're God. Now, can you imagine how the ego of people will feel when they've actually lost all them losses in one go, listening to different people? So here, people are going to be scared to get in. Now for me personally, I just want to see a little more confirmation, and I would get in and then obviously look for the higher time frames to see where this can go next. So I just want to sit my hands for the moment, just be a little bit cautious. I'm not saying to jump in straight away, I'm not saying it's a long-term hold and buy. What I'm saying is there are some potential here and people are going to be scared. So don't think this will rally up hard like it did here. Bum, bum, bum. It will be up and down, up and down. This will be an emotional roller coaster for a lot of people here. My advice, if you bought in around this area here and you're still holding, the problem you have is this, is if this puts a higher low in somewhere, you're still bearish. And the higher low at the moment is still going to be at $13,000. It's not bullish at $13,000 at the moment, guys. And that's something you need to understand, because you can just link these two together. And there, 13,000, you're still being capped, you are, guys. So just be careful there. If you get to 13,000, don't start celebrating thinking you're gods again, because people like me look at it and go, it's bearish. It's good value to sell, unfortunately, yeah. So I'll be looking maybe to get in a little bit later on, and I'll sell around here somewhere, take a little profit in the middle if I was really that interested in it, if the chart was perfect. But I want you guys to know that if it goes to 13,000, it's still going to be bearish. It is, okay, yeah, because the overall trend on the higher time frames is bearish now. It's changed its trend, so just be careful, yeah. Any questions? Give me a shout, and I hope you enjoyed it. I'll speak to you soon.